If journal entries confuse you, debit or credit, which side goes where, you're not alone. In this video, I'll explain journal entries in a simple way. A journal entry is the method used to record the double entry for a transaction. The journal is used for adjustments, corrections, and non-routine transactions. So when we talk about journal entries, we are really talking about how the double entry works. The key principle in accounting is double entry. Every transaction affects at least two accounts. One account is debited and one account is credited. And the total debit must always equal the total credit. The easiest way to understand debit and credit is to think about what is increasing and what is decreasing. Here are the basic rules. Assets and expenses increase with a debit and liabilities, income, and equity increase with a credit. This follows the accounting equation. Assets equal liabilities plus equity. Let's look at an example. The business buys equipment for £1,000 in cash. Equipment is increasing and cash is decreasing. Equipment is an asset, so an increase is a debit. Cash is also an asset, so a decrease is a credit. So the journal entry is debit equipment 1,000 and credit cash 1,000. Now let's look at how to actually write a journal entry in the correct format. A journal entry has three main parts. The date, a short description which explains the transaction, the account names with debit and credit. We debit equipment 1,000 and credit cash. Debit should equal credit. Next example. The owner invests £5,000 into the business. Bank is increasing, so we debit bank. Capital is increasing, so we credit capital. So the entry is debit bank 5,000, credit capital 5,000. Now let's look at an expense. The business pays rent of £500. Rent is an expense and it is increasing, so we debit rent. Bank is decreasing, so we credit bank. So the entry is debit rent 500 and credit bank 500. Now let's look at an example involving revenue. The business provides services on credit and bills £1,000 its customer. We now have trade receivables increasing and revenue increasing. Our journal entry is debit trade receivables 1,000 and credit revenue. Revenue is always credited when it is earned, whether cash is received immediately or later. Now let's look at accruals. An accrual is an expense that has been incurred but not yet paid. At the year end, the business owes rent of £800, but it has not yet been paid. We have rent expense and accruals. Rent expense is increasing because the business has used the premises. Accruals represent a liability because the business owes money. Expenses increase with a debit. Liabilities increase with a credit. So the journal entry is debit rent expense 800 and credit accruals. Accruals recognise expenses in the correct accounting period, even if they have not yet been paid. Now let's look at prepayments. A prepayment is when an expense has been paid in advance. Prepayments are assets because they represent something the business has already paid for, but will benefit from in the future. For example, the business pays insurance of £1,200 for 12 months from January to December. Now imagine our financial year end is September. That means the business has only used 9 months of the insurance for that financial year. So, out of the £1,200, £900 relates to this period and £300 relates to the next period. The £300 relates to the next period because the business has not yet used that part of the insurance. It is a future benefit. In accounting, we only record expenses that relate to the current period. This is called the matching principle. So we need to remove the £300 from this year's expense and carry it forward to the next period. To do this, we record a journal. Debit prepayments £300 and credit insurance expense £300. This reduces the expense in the current period and recognises an asset for the future. We paid for 12 months, but only used 9 months, so we carry forward the remaining 3 months. Let's quickly recap what we've covered about journal entries. A journal entry records the double entry for a transaction. Every transaction has 2 sides, a debit and a credit, and they must always be equal. Assets and expenses increase with a debit. Liabilities, income, and equity increase with a credit. To record a journal entry, always follow the same steps. Start with the date, a short narration describing the transaction. Write the debit and credit entries. Accruals recognize expenses that have been incurred but not yet paid. Prepayments recognize amounts paid in advance that relate to future periods.